Good afternoon and welcome to the end of day review for today. And today is Thursday, April 4, 2024. So the market's closed 20 minutes ago. We have a huge surprise for today. So one more day before we go to Friday, which is a non-farm payroll data. The reason why we see a huge surprise, we set huge surprise today because look at the price action. When we go to detail, we see it. But today we have a sharper claim at 8:30, but the market is react positively. Basically, the sharper claim is 9 weeks up. That means that more people losing their job and they apply for benefit. So somehow the market is really based on these logics because that means the economy is going to slow down, and that means the Fed going to cut rate. So that's the headline that we receive around 9 a.m. Central Time right there, which is 8 a.m. Right here, job claims, and also based on the anticipate the job on Friday, and also the Fed Chair Jerome Powell yesterday said that the rate cut gonna come, and that's the reason market rally. We know that the author would Angelina weigh something. She wrote his article, but it right, but right after PM, it no longer right. When we go look into the chart, we will see that's logic. But anyway, before we go into the trade, we look at the weekly profile, and we certainly think that this is the classic Tuesday low of the week. That's what we see, and at 8:30 or before the PM for today, we still believe that. We certainly, because we saw the market really hard, so we think definitely it fit into this profile, which is Tuesday low is the low of the week. But after the PM, the surprise that we alluded to in the beginning of this recording will tell us a little bit different story. That may not be at the low of the week. Let's see how the market reacts to a non-farm payroll tomorrow. Yeah, we did. We also today we add into another economic event that we're going to watch, which is the Friday. So I think the non-farm payroll falling on the first Friday of every month. So let's say first Friday of every month, first Friday March right there. Yeah, that's what we added to for today. So basically the release is going to be April 5th, which is tomorrow. We want to see if that the first Friday every month first Friday. Let's check it out. Is it correct? Over here. Yes, the first Friday every month. You see that? First Friday every month. Keep that in mind. So the first Friday every month, that's non-farm payroll right there. Put that into our trade journal so we remember. Yeah, we incorporate that into our economic calendar. Non-farm payroll right there. So the jobless claim, which is on Thursday, and then we have non-farm payroll report on first Friday every month. By the way, you see the note right there. We did see the model for today, which is we're gonna look into that. All right, so basically we incorporate. First, we look at the Fed meeting, the option, not much this week, and the next event for us is gonna be this Friday, a non-farm payroll, and then we look for April 10, April 5th, non-farm payroll, April 10, next Tuesday, is that right? Next Wednesday. Next Wednesday gonna be CPI data release. We really want to see how Friday, close. Because set up the query or the tune for next Wednesday, and then 25th we have GDP data, and then we have Fed meeting. All right, when we go to see what the model it fit, right? So we're going to go to the chart today, and we see that it's going to be a huge gap up, way above the Friday high right there. So we look at the model, it have a gap right there, but it not fitted, it not matched for today. The model 2.2 right there not fit. So we're looking for this model 211, which is the Utah swing, where it bring the markets high, and we add it right there into our journal, which is the Utah swing before us. Utah swing, which has happened today, created by a jobless claim release 08/8/30. So looking for that, and that's exactly happened for today. We have that's happened, and that's which one it bring the huge gap up, and that's what happened. Look at the chart right now. Go into the chart right now. We see that the huge gap up right there, and if we look at here, you see the gap up. This all the same, 5-minute chart, but this one we just have for the regular trading hour only, and this one is for extended, trading hour. So you see huge gap right there. So we see that it's a huge Utah swing before 9:30. So we go in with that mindset. We're gonna short, and we would have buy stop right here, when the last breakout level. We're thinking about go right here, right? But if we go right here, we have to put stop above here. We're still in the trade. Don't move our stop loss. Or we can go here at the 35 instead of the exactly 930. But anyways, this week we don't have to any real trade. We just want to take 1 week off. So this week mainly we just observe, take a note, and do back test. So that's our job for this week. So get out of the way. So we think we take a couple of screenshots when it happens in real time. We also do record them, but we're not so right now. We need to converse. So basically, right here is this what happened right here. So it happened in real time, and we do pair between the 5 minutes, the low time frame, and the high time frame, which is 1 hour right here. So we anticipate that it's gonna be a 4 breakout right there, and then it's gonna be touch the level, and also we anticipate after the huge up close candle, this candle gonna be dozy because it's gonna create a fabric gap. That's the reason why we just aim for these targets. Very conservative target right there, and we reach. When we go in right here, we're gonna reach $2.13, and we get $7.26. So it's almost 1 to 3. It's very close, or 2.8. Let's do check, pull out a calculator and see if our math is right. So basically is 736 divide by 213. Oh, perfect. 3.4. Somehow we thought it's less than 3. Well, that's good then. Perfect. So we have a good right there. However, if we are greedy, or if we are more experienced, we know that that target can be another, second target can be in the play. So this is the model that we call exactly, high-60 model, 311 Euro swing. However, in here it doesn't tell us what is the make of the Euro swing. Today we have information. So the Euro swing is looking for on a Thursday, where the day before non-farm payroll. The day before non-farm payroll Friday. So now we have a little bit information to give more, context to this model. So look for that swing. It will swing if you look for that, it swing real hard right there, as the Euro swing right there. And if we short, then that's the target we aim for right there, which is a high time frame 52.97.75, which is a breakthrough right there, and it's gonna retest. But if we let it run, we can go down a little bit more. Well, let's see how further down we go. Go into the chart. Okay, so if we aim right there, we get out. However, if we can let it run right here, we can get how many more we're gonna get? 100 points. If we let it run Let's say we aim at the sell side liquidity right there. So we get another $3.42 right there. That's another $3. So we get original is 1, 2, 3, right? So you have 3R, and then if we get it run, it will get another 1R. So yeah, around 1R right there. The idea is that it's gonna rate the sell side liquidity of the quarter 3 before it's go back up again. And this is also a Judah swing in order to see the huge sell up right there. And this Judah swing is very interesting. It happened from 11, kind of in the midst of the Q4 into the Q1. Look right there. This is the order block. See that? And right here, if we look carefully, you can see the huge pattern right here for it right there. So we see that it breaks out the level with a family gap. And this is the order block right there. Order block for that pretest. So we go short at 13.10 right there. A perfect short right there. See that? Perfect short setup. Alright, we see the setup right there. But however, as soon as we finish this setup, we go with the ICT, gives us Judah swing. But in this case, we have a little bit, wow. So the target can be the low of the prior day. Let's see if that happened. If it that, and we target the low, wow, yeah, it did happen. But we have to get out, then re-entry. Otherwise, we will get stop out. So the first try we try with at this, we cannot stay in the trade right there. The first we try with at the sell side liquidity exactly. You see that? As soon as it rate the sell side liquidity of the Q3, it reverse. Okay, look at the screenshot we have in the real time. Okay, keep in mind our first target, it's a very conservative right there. It hit right there. Just 1, 2, 3, 4 candle. It hit our targets, which is 20 minutes. We're out, and now we observe. Let's say we observe, and we see how it's played. You see how it's played. We mark the low right here is a last, displacement, and we mark that low. We see it's break that, but there's no fellow gap until here. We see the gap up right there. That's the gap up, and then we see the gap down. Then in the real time we thought it's gonna be break, but it's kind of flipped. So it tells us it's the balance bright range right there. Gap up, gap down, retest, and then go down. But it's not gonna completely go down all the way down. It reverses right here. So it's very tricky. So when we see this, give us a signal. You see that it break down this level. So the whole time you see that this so-called bullish breaker right? It's a bullish breaker. It's still staying there, but as soon as breakdown level, we thought that we're going to short them, but that is exactly the moment that market reversed, and it happened. You see that? And another signal for us is that we marked the last bearish breaker, in this case the Dow Jones candle. We see that breakdown level with a feather gap, and look at this candle. It's not automatic, but it's right away it closed that gap. That gives us a signal right there. So the next candle we're gonna go in, we go long, and we can ride the wave right here up. We can target this sell side liquidity or this level, and it hit right there. So you see this move is like a manipulation move right there. And we did take that screenshot. At that screenshot, okay. Where do we? Okay, right here. So we have it. So the logic right here, or the model, the framework behind this is close the fair value gap down right away after this level, which is coincident, is also a liquidity of the quarter 3. As soon as it breaks that level, it creates a gap. We see the next candle is closed right away. Then it gives a strong signal that we can go long right there. So with a buy stop at this level at 412.95 right there, and we can ride away up there. Yep, and when we ride up way, we hit the target right there, which is sell side liquidity right there. So put that together, we have a setup. So we can either go in right here or go in right here. Let's go in right here. Yeah, a buy stop right there. So first we have a short trade, we get out, as soon as we get out, we find opportunity to get in. Okay, so then here's our okay. Let's move it to the 1 hour time frame. And this gonna be at 11 right there. Okay. We don't want to see that right away, yes. And let's document this. So maybe we want to go in right here. You know, if we don't want to go early, too risky, wait for the confirmation, which is a huge up close candle that closed the fellow gap down right away at a breakout level, which is this level or this level, either way. The gap is between those two levels. And you see this up close candle break 2 level right there also. So very strong. So basically we put a buy stop in there and we reach $2. and let's see how much, and let's say that we are target the sell side liquidity right there. Let's do it on the right. Okay, so we're going right here. It's just a 4 breakout, beautiful 4 breakout. So you see, the whole time it validate or validate this bullish breaker. As soon as it break that bullish breaker, and also this bearish breaker level with a fellow gap, then it fill the gap right away. That can give a signal right there. But you see the whole time right here, just set up liquidity for the buy side liquidity, and then boom, go get it. All right, let's take this screenshot and put into our database, our trade log. So basically, it's a 4 breakdown, 4 breakout, which can, and in this case, it don't have it takes time around, you know, around the half an hour, right? 11:25, so it's around on half an hour, which is a good time alignment right there. But in this case, we don't have like order block, fellow gap retest. We do not have that setup. That's amazing right there. Do we see any order block? Yeah, order block right there. We see this is an order block. The last bearish breaker is become the bullish order block, but we don't see the retest, right, of fellow gap form. We have fellow gap, but there's no retest. So we see that huge manipulation right there. But anyway, it's a long setup. Normally we have fair breakout based on auto block fellow gap or breaker fellow gap. Okay, and then we're gonna put a buy stop at 552.95.25, which is this level right here, which is the level of the bullish breaker. It's bullish breaker. So it break this level, basically it invalidates that with fellow gap, and automatically it rebalance. So we know that that is a fake move right there. It's 4 breakout right there. The entry time is just right around on the half an hour. In this case, 11:25, and we have a risk to reward ratio. Oh, how much? Really? $2. Oh, we don't see 14.27. Why so hard to see? Oh, so this one is transparent. Let's move to this way a little bit so it will not interfere. All right, keep moving a little bit so we can see the reward. 14.29. So it's a roll up to 3, almost 125 right there. We can go 124. Exactly, I think it's so basically 1429 divided by 236. Wow, 126 with the war ratio right there. So we have 1, 2, 3, and now we have 3R, and now we have 6R. And then the next trade we will have a giant move. So let's document this again. It's 1 to 6 visual ratio. The target is the Q3 right there. It's a Q3 bicycle right there. Right. For breakout, in this case, it don't have, auto block, photograph, retest. That's not the setup we see. Yeah, anti-time 25 right there, and we have to give something a little bit different. Q3 bicycle. Yes, so we have the first setup right here with short UDA swing, and we get out at here, and now we have a long setup, and next we have a beautiful move down right here to move it. Okay, we'll have to see right here. Yes, it's a little bit hard to see, but if we look carefully, we can see the huge setup. So basically, when this breakout level break with a gap, you see that? See the gap? And then it also break down that level with a gap. Gap up, gap down, and right here it's just a retest. Man, how beautiful is that, Oh, if we don't look close, we will mix this trade right there. That's opportunity. Same idea like this guy. Oh, I mean, this guy is the gap close right away, but here you see that the gap, and then you have a gap down. The gap down right here is very tiny. It's hard to see. But if we look carefully, you see that the gap right here, this kind of weekend right there. So break down, gap up, balance break range right there. You see that? It did hit into that balance break range error right there. Wow. We missed this trade. Yep. Our target gonna be the low or the level, or we just target at the high of the 930 when it data release right there. You see that we did this when the sharpers claim data release right there. We can target right there at this level, but if we let it run, we can make huge money. See that we go in right here. It's the retest right here. Just if we want, we just put a buy stop. A sell stop when it go below this bearish auto block right here. Bearish auto block at 1305. Okay, if we put right here, it will never hit that level because it already break down with a fellow gap. If we want, then we have to enter right here. But we want to see the balance break range. If we go over here, we go early because that can be trigger. This can be triggered at a auto block right here, a bearish block. But let's go with this. It's much more. Wait for confirmation, like a beginner trader. What I want to see if we go in right here. Oh, where it leaving the gap. So we put a stop limit right there. And then our stop loss will be this. Oh, not much, really $2. And let's say we I don't want to zoom, then we lose the view right there, you see. If we keep that view, we can see it's huge. Let's look at the other chart right here. If it allows to see, yeah, this chart may be better. If not, the same thing happened. But anyway, let's say we're conservative arm for here. We don't worry about that. So let's do that. Let's see right here. Yeah, the high. Alright, now let's copy this to see if we are check this trade. Then if we are for this, we have a huge run right there. I mean 1-to-8 ratio right there. 1-to-8 ratio. And it didn't happen. It more than 1-to-8. See that right here. So we have a hedge setup right here, balance right range setup beautifully. Let's take 3 screenshot. No, we have to put this into a 1 hour time frame so we have an idea. Right here, we're going 1. Yep. Yeah, let's say we're going at that level. Okay. So basically we have a balance break range retest, it a short setup. We do a sell limit. Yeah, just around that level. Sell limit around, we would say 53.03. Right there, or 04 right there. We just right at the balance right there, balance right range. Stop loss just above that. A stop loss right here, and entry time is 13.10. The risk rate was 1-to-8 right there. Beautiful. What could ask more for that? Man, that's amazing trade right there. We just target right here. but if you let it run, it's gonna be huge. So it's gonna be a balance break range. Retest. Search it up. And the time is 13, 10. Wow, that's about right. That is about right. Alright, but if we let it run, wow, we see, we will triple our money. Look at that. Hold on. So it's 18. It gives us 16, right? If we go all the way here, let it run until 15 hours. Oh man, we got giant move, $88 right there, and that take out the low of the Friday right there. Yeah, right. Oh, it's more than the Friday. Let's say we're only 6 for the low of Friday. That exactly happened. Which is leg level. Just that level. We still have $69 right there. See that? That's a huge move. Yep. All right, we try to wrap up here. Let's look at the high time frame on the 1 hour. No, on the daily time frame right here. Wow. See that? I mean, before the PM session start, this is this, if you look what they're calling, this is a huge up move candle. You see up here, and now it turned to down move. So it's the huge resistance right here. This double breakout right there. You remember all day we see fair gap down, flow up, and this just a retest, and it make a fair gap down again, and here it's just a retest right there, and that means this become a bearish order block right there, bearish order block, and you see the fair gap between those. Gap up, gap down, retest, boom. Yep. Let's see on the weekly. All right, on the weekly, I think it break out the key level, which is this level right there. It break it out. See what time I break it out. Yeah, I break it out at 12:25 right there, without the weekly level right there. All right, I think that's enough for today. We thank you for your time and interest. We're always grateful for this opportunity. We do what we love, then success is coming to our way. Bye for now and have a great evening.